so in love with you.
Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now, the data is in, and shocking trends continue to make ripples across the nation as fear and uncertainty continue to grip American households. But here's the thing, fear can actually be a good thing so long as you're prepared. And that, my friends, can be the difference of becoming a winner and a loser on the other side of this housing market. And today what we're going to do is I'm going to give you guys so much data. I'm going to rapid fire data and shocking trends about what is going on right now in the housing market. But you guys, do me a favor before I do that, like this video, subscribe if you haven't, and do me a favor and shoot a comment below. But regardless, let's get started on some leading indicators right now. And remember, you guys, everything is going to be linked in my description, and I'm going to try to withhold my opinion here, and I'm just going to give you guys the data. So starting with Redfin's leading indicator, and I'm bringing this up first because the reality is these numbers are straight up shocking. These numbers are absolutely horrific for anyone in the industry right now. So let's start with online searches. So online searches are down year over year, 35%. Home buying demand is down year over year, 25%. According to Zillow, it's actually in the 30s. Touring activity, 23 plus 9, guys. Touring activity is down 32%. The big one here, mortgage applications are down 39%. These are massive, massive indicators that are spelling out that our housing market right now is crumbling apart before our very eyes. Now, let's take a look at some leading metro areas that are the first to start crumbling. So I'm going to show you guys metro areas that have already had year-over-year price declines, starting with San Francisco. So you can see San Francisco right here. The black line is 2022. The orange line is 2021. When the black line is under the orange line, that is not good for anyone that purchased property in the last year. Essentially, it basically means that they're upside down. So in San Francisco is down year over year, $21,000. That is astronomical. Number two is Oakland. As you can see, the black line is under the orange line. So in Oakland, we are down year over year on the median sales price by $32,000 right now. That means if you bought in Oakland over the last year, you're down roughly $32,000. Now here's New Orleans. Now New Orleans is a crazy metro area. I'm still trying to figure it out. But as you can see, the black line is under the orange line. So New Orleans is actually down year over year $27,000. So New Orleans is taking an absolute beating. Now here's San Jose. Now San Jose just got over the orange line, but as you can see here, it did drop under the orange line, but it is back above. But San Jose, you guys, is taking an absolute beating as well. And I have no doubt that this will once again make the list of year over year price decline for metro areas. Now, this is Buffalo, New York. As you can see, it went back over the line. It's difficult to see when it crossed under the orange line, but it did according to Redfin. So Buffalo, New York, I have no doubt will make this list this year once again. Now, we're going to end this on Honolulu as far as year over year price decline. Now, as you can see, the black line many times went under the orange line. So Honolulu is all over the place. It went back over the year over year price decline, but as you can see here, it is only a matter of time before Honolulu crosses that threshold once again. Now, this is massively important to understand that anyone in those 6 metro areas that I just listed, again, that purchased over the last year is upside down in their house, assuming they put minimum down, right? If someone put cash or 20% down, it can be a little bit different. But nevertheless, you guys, those 6 metro areas, super bad for anyone that purchased the last year, whether it was for their primary residence or their investment property. Now let's take a look at metro areas that are crashing right now. And again, remember, I'm considering the bare minimum crash or a city to be considered crashing, 15% decline from peak. Okay, that's the bare minimum. So that's where we're going to show you guys next. All right, I'm going to start with San Jose. So as you can see, San Jose is down from peak right here to current is down 16.3%. So San Jose is crashing horribly right now. Another metro area with a price crash is Oakland. So from peak right here to current, Oakland is down 16.8%. So obviously 2 California cities are being crushed right now as far as price. Here's the third city. Now I brought this to you guys, breaking news. Now obviously from peak right here to trough, Austin is down for median sales price 17%. Now here is the leading metro area right now as far as price crashes. It is Hoover, Utah. Let me know if I pronounce that right. I know I'm not pronouncing that right, but from peak right here to current, guys, Hoover is down 22% from peak on their median sales price. So imagine purchasing over the last, say, maybe 4 months there and losing 22% in equity. Try to fathom that for a second if you think that this is seasonal. Okay. Metro areas in a normal market don't normally, like rarely ever have year over year price decline. So the fact that we have already seen 6 of those metro areas and already have 4 metro areas with price crashes is telling us this is anything but seasonal. These trends are absolutely shocking. Let's move on to the next set. So obviously this market is a lot different than 2008. And you guys have heard me say that I believe the price crashes specifically are going to be worse than 2008. I don't believe foreclosures will, but I definitely believe the price crash will. And part of the reason that is, guys, is the investor shares. I believe that there's a ton of investors that are about to be reamed, quite frankly. So I just highlighted right here, I wanted to show you that roughly Q1 of 2008, investor shares were about under 10%. So let's just say about 9%. So essentially from the last crash to right now, the investor share in the housing market has doubled. Okay, so in Q1 of 2022, investor share, this is the national average, 20%. It went down Q2 to 19%. But regardless, you guys, we have an overwhelming amount of investors that have started purchasing a bunch of property in our housing market. And if those investors are flippers are absolutely destroyed right now. And most of them are asking themselves that are currently flipping right now, how much money am I willing to lose to get out from underneath this house? But that's just flippers. Now, what about the investors that hold like commercial multifamily and other investors that are purchasing single family residence to rent? Here's the thing, guys. Now, as crazy as this sounds, and I understand it sounds crazy, okay? I understand that. But it is possible that rent actually starts going down. And if rent goes down on average, these investors are absolutely doomed, and we will see a surge of short sales for properties that are investor owned. Mark my word. Take a look at this. Now, this is CoreLogic's National Single Family Rent Index year over year percentage. And this is SFR, low tier, medium tier, and high tier. Okay. So essentially, it's saying that rent increases have peaked and are now going down with low, medium, and high tier properties. You know, this is one data set from CoreLogic that I'm going to be keeping my eye on. Here's another. This is from RealPage, and this goes back to 2017. And this is also super shocking, guys. And now let me read this to you guys. And this came out a few days ago. A surprisingly big slowdown in leasing traffic pushed net apartment demand moderately negative in third quarter at 82,000 units, typically a seasonally strong leasing period. It also marked the first time in RealPage's 30 years of tracking U.S. apartment that demand registered negative during a third quarter period. And not only did it report negative, it was massively negative. And that is the first time that we've had 2 quarters in a row showing negative. So the rental market, guys, is absolutely getting crushed. So the question is there big trouble around the corner for investors? And I believe there is absolutely big trouble for investors around the corner. But not only do I feel that way about investors, I also feel that way with new construction, because new construction builders right now are sitting on a lot of inventory that they cannot sell, even though they're offering crazy buying incentives. And even though a lot of them are shedding 10, 15, 20% off list price, they still can't sell the houses, at least in Texas and Houston, in my local market. Take a look at this. Now, as we move forward into months where inventory is historically going to go down, I think it's really important to keep our eyes on monthly supply of homes, whether it's resales or new homes, because that's going to take into account demand. So what I want to point out, this is a 10-year chart, guys. we have 8.1 months of new inventory right now. We need 6 months for it to be considered a buyer's market, which means in new construction, we absolutely have a buyer's market. And this is the 10-year view. So for the last 10 years, we've averaged what, under 6 months of inventory for new builds? And look at it, shot up. So in other words, you guys, these people, these builders, new construction builders, are going to have to fire sell these properties to liquidate profits so they can stay in business, just like that happened in the past. This is no mystery. If you understand what's going on right now, it's going to be a lot easier for you to be a winner and make good decisions moving forward. Now, I wanted to give you guys an overwhelming amount of data and try to keep my opinion out of it as much as possible. So do me a favor. I want you guys to comment below and let me know if you think we're going to have a housing market crash in prices and whether or not prices will go down more than they did in 2008. So I hope to hear that from you guys. Comment below. Now, other than that, I really hope you guys got some insights, some value, and perspective from today's video. And if you're out there investing in real estate, I do wish you luck, and I hope you win.